Hello, everybody, and welcome to our Before the Bell in 3D, week 34, August 21, 2023. My name is Jose Blasco. Let me go ahead and remove the introduction slide so we can see. How are you, everybody? Welcome. It's Monday. The markets will be opening in 1 hour time, isn't it? And as every Monday, we are getting together to prepare for the week ahead. So that's the plan. So let's begin. Let me make a little bit more space on the screen by removing the before the bell in 3D so we can go ahead. And also I need to highlight the financial disclaimer on the bottom part of the screen. You can feel free to read it as we go over the materials. So what are we going to do today? Well, we're going to go over 5 key markets as we do every Monday when we prepare for the week ahead. The 5 key markets that we're going to see are, here we go, S&P 500 index, crude oil, gold, the US dollar, as well as the backed Bitcoin. This, by the way, what you see on the screen right now is our newsletter. Feel free to find us. Let me go ahead and share a QR code so you know where to find it. So feel free to find us and subscribe to it. We publish the newsletter on LinkedIn, but you also receive it on your inbox, in your email. So it's convenient in case you cannot attend these sessions live on the Monday. So you can always then go back and get the figures and the specifics that we're going to discuss today. Okay, we're going to start with the first market, which is the S&P 500. Instead of looking at it in the newsletter, what I'm going to do is use real-time charts to do the market analysis. And as always, our market analysis, as the name of the session suggests, is before the bell in 3D. So we do our analysis in 3 dimensions, meaning that we're going to be looking at 3 key elements that help understand the markets and therefore plan the trades efficiently, know what to expect, manage the risk, and when right, take a nice profit, and when wrong, make sure the losses are contained as we understand market conditions. And we know where to place our stops, we know how to exit, we know our contingency plan as well, which is just as important as making money, if not more. Okay. Anyway, so let's begin with the first market, and the first indication that we're going to look at here with the S&P is the climate. The climate, as you can see, is a thick red dot, so that means this is a down climate. A bit surprising, to be honest, that the S&P had such a long leg to the downside. That was not expected. We had a green UFO that was not respected. The orders were canceled. As well as we often do analysis using options data that suggested buyers were in the market, but not at the current price. I guess that lower at 43.69 where this UFO is, probably yes, because we can see this powerful bounce today with the blue candle. But in the meantime, the market has extended a lot to the downside, more than what I would say was expected based on probabilities. And what is expected based on probabilities? Where the expectation was a move to the downside of 3 candles, where actually the move has ended up being, so far until today, 13 candles on the way down, which is extremely extreme. So definitely not expected. And of course, it also has a lot to do with what happened to the US dollar itself, which is the currency in which most markets are priced. To be honest, the craziness that is happening in many markets, it's led by the dollar index itself, like it happens many, many times when something significant happens in the market. So we'll see that later, and that's when you get to see those probabilities broken. In any case, no matter if the probabilities are broken or not, using probabilities or stats as a guide or a reference is definitely smarter than using a gut feeling, if I could have a bad joke here, as a reference, because obviously we want to create consistency in action, to create consistency in results, and therefore stats is a great reference, even though stats are not a guarantee, and this is a great example today. What else? So dimension number 1, the climate is down, but careful with that because it may not be sustainable given the fact that we surpassed 3 by a lot. We went all the way to 13. Buy on field orders located at 43.69. They were hit last Friday, and notice how the market is bouncing pretty powerfully from those buy orders. There are still orders, by the way. If the market was to come back down, we may get to see another bounce that may be seen as a double bottom, and then the market goes higher. But careful, we have red UFOs at 49.59. UFO stands for on-field orders, so on-field orders to sell at 44.59. that may bring the S&P back down, and we may get to see a little bit of sideways action for some time. That could be the case until the market defines itself in a more stable manner, because right now it's really not reliable in the sense that we have surpassed by a lot what probability is suggested. So we need a change of climate to be able to restart with the S&P. Now, what else? There is another component which is very important in understanding the markets, which is the expected volatility, which we could see here on this section of our newsletter. The expected moves. We get this information by looking at options. We look at the options and we reverse engineer the options pricing models, and given the prices of the options, we conclude that the expectation for a day is 47 points. The expectation for a week is 105 points. The expectation for a month is 219 points. That is what is expected based on the current prices of options. Okay, so this is important now, because now you know your three dimensions. You know what's the climate, which is likely unsustainable. You know where the buy and the sell on field orders are. The buy on field orders are likely going to reverse the climate, so we'll see that happening in a few days. And then the expected move tells you if this market is too boring for you or too much for you, depending on your trading styles. It's important to know what to expect from a speed of movement point of view. Next one, we are now moving to crude oil. This is going to be our next market. And again, same exercise. We're going to start with looking at real-time charts for crude oil. Okay, so here is crude oil. We see that crude oil also had a spectacular move, again, led by the US dollar. And the US dollar has done a lot in recent times. Last Monday, actually, we were talking about this red UFO with the potential of reversing the climate from blue to red, and it did. But careful, because now we have a gray line under the red dot, and that signals a likely change of climate. Okay, a likely change of climate. Now, having said that, careful, because the dot is thin. And being thin instead of thick, which were the three dots before were thick, the current dot is thin. That means that climate indication really doesn't mean too much. The climate is not confirmed. If I use the same terminology that you get when you attend our courses. So the climate is not confirmed, and given the fact that we are now entering an area where sell-on fillers are available, we may get to see one tiny blue dot, like those thin blue dots that we had before, just to see another leg down all the way to 76.87. So this is something that could certainly be happening. Again, I'm just reading market data, reading stats given to us thanks to AutoClimate and AutoUFOs, which is a patented tool. AutoUFOs. UFOs stands for on-field orders, and obviously all of these, if traded, if you do it the way I do, certainly always managing risk for every single trade, either because you use options with limited risk strategies, or because you use stops, or any other contingency measure that is part of your trading plan. Okay, so make sure you understand this is not financial advice. This is just market analysis to be implemented depending on your plan, and we all have a different plan, isn't it? By the way, I just mentioned courses. I also mentioned technology. So I'm using AutoUFOs, AutoClimate, in case you want to go take a look at our website and see what is it that we do with the technology. So here is a QR code on the screen that would help you to do that. In the meantime, I'll talk about the expected moves for crude oil, which is 1.44 points a day, 3.18 points a week, and 6.62 points per month. That is extracted from options on crude oil futures. Anyway, next one in line is gold. Okay, this is gold, and we're gonna go back to the charts to analyze our gold markets. 1, 2, 3. And let's begin with the climate analysis. So again, gold presents a very extended climate. 5 is a normal thing to happen on the way down. 10 is the current condition. So this price action on the way down for gold has been too continuous, statistically speaking. Therefore, likely not sustainable. So we may have a change in direction, even though, careful here, plenty of sell-on field orders overhead for gold. So we may get to see a very powerful leg all the way to 1828, even though it may require a temporary change of climate up to 6 days. That would be a normal thing to expect, of gold going back up, and from there hit the red UFO and starts moving down one more time. So this is what we have with gold. Again, the next market I'm going to analyze is the US dollar, and you will see how everything now makes sense. Because in the end, the moves on the US dollar have driven the moves on the S&P, on gold, on crude oil, on everything really, because most of the key markets in the world are priced with US dollars. So climate, rainy in the case of gold, sell on field orders 1954, buy on field orders 1828, and expected moves 15 points a day, 33 points a week, almost 70 points per month. That is what is expected. So the next market we're going to analyze is the US dollar. So let's take a look at the US dollar. We will start with the real-time charts, okay? But even before I get to the real-time charts, look at that. Look at this parabolic, crazy, powerful move to the upside on the dollar, isn't it? Well, that's what I meant. Okay, let me show you that real-time. So loading dollar, 1, 2, 3. Here we go. So here's the move. And so what's happening? We have a non-sustainable climate on the dollar. 17 is the current stage of the climate. 5 is a normal thing to happen. So this is 3 times more. It's like 3 standard deviations. This is something that should happen only 1% of the cases. Well, it's happening based on basic stats or basic interpretation of statistics. And you could see how, again, the move is, even visually speaking, I guess a picture is worth 1,000 words, isn't it? It's pretty self-explanatory. Okay, now notice how the moment it got to the UFO, it started reacting to the downside. The same thing happened here when there was another UFO and it dropped, but then it continued. So we may see a continuation of the drop. And given the fact that this climate is so overextended, we may get to see the dollar to go down all the way to 1986, which if that's the case, that would be very bullish, for example, for equities. We would typically see equities rallying very aggressively, okay? So we're going to have to observe and wait for a change of climate, because now trading at this stage, both on the S&P and the dollar, as I said, it's not the best idea on the daily time frame. Of course, intraday or longer term, why not? I am using the daily time frame, so all my market commentary is based on the daily time frame, obviously. And in this time frame, it would basically be a little bit of a gamble, because statistics are telling you the opposite of what's happening. So relying on statistics makes no sense, and not relying on statistics is a gamble. In other words, this is one of those cases where sitting on your hands is trading, and you wait for a change of climate, and then you attack again. Speed of movement expected to be at a rate of 0.48 points a day, 1.05 points a week, 2.18 points per month. And the next market, last market that we will analyze today, is the backed Bitcoin, where we will see here, if I load backed Bitcoin, that this market has been dropping aggressively. The current price of Bitcoin is right here. You can also see the lack of liquidity on this market compared to what it used to be, isn't it? So much less money is in the cryptocurrency markets these days. Even though I'm not necessarily saying this is a bad place where to have your capital. Again, it's all about your trading plan and asset allocation strategy, of course. So anyway, so where are we at? We are in a down climate. That one is confirmed, and it's just at the beginning. 3 is the current stage. 5 is a normal thing to happen. So I will not be surprised to see another 2-3 days of Bitcoin going down. And if that's the case, you are now getting into the buy territory with buy on field orders, which would likely bring that Bitcoin back up to around 29,000. So we are talking about 29,135. This is where the sell orders are. 27,420, which is more or less the current price. This is where the buy on field orders are. And the expected move is much higher this week. Volatility is expected this time compared to the prior week. 800 over points a day, close to 2,000 points a week, close to 4,000 points a month. With all of this said, we have our market analysis completed. We just need to talk about economic reports, economic news, economic calendar, which happens to be a little bit, I'm going to say it is informal, but a little bit of a boring week. I mean, for sure, there is important information, like if you trade Japanese products, CPI in Japan, right? For sure, someone from the Fed will be picking. If they say something impactful, there may be a reaction. For sure, PMI in Europe. Again, there are important relevant events here, but again, this is not one of those weeks where you have change of rates, unemployment number. So this is not happening this week. So while there is always spice and juice in the market, and our job is to extract that as traders, today, or this week I should say, is probably a little bit more on the quiet side, unless something happened in the form of unexpected news. And finally, as we complete the session today, I am highlighting a QR code on the upper left side of your screen, so you can go grab our Mystery to Mastery series book. This is a powerful tool because it teaches you how to trade everything, not only Forex, even though it uses Forex as examples for the charts. But really, everything you trade is a currency. You trade futures is points, points is dollars, so it's a currency. So no matter what you trade, this book is definitely helpful, and we're proud to say that we've been designated #1 new release in 3 categories in Amazon. So we are proud of that, and probably means it's a good tool. Talking about tools, the book comes with you can see the red badge. What it says here is that you get a free course included with the book. So you just follow the instructions in the book itself to get the course. It's free. And then you also get multiple months of access to our patented technology, auto UFOs, with purchasing the book, which is obviously priced at a book price, which is, I would say, quite affordable. So anyway, with all of this said, we're done for today. It's been a pleasure, as always, to conduct this session for you guys, to hopefully help you to get organized as the week begins, as the market will be opening in 45 minutes time. When I say the market, I mean the New York session, which is the largest equity index markets. Of course, many other markets are trading since Monday morning all the way New Zealand time. So many markets are trading heavily already for many hours. But again, equity markets, which are relevant, New York, it's probably the most relevant place in the world for financial markets. And that starts in 45 minutes. So thank you for joining me. See you in the next one. And in case you don't know, just know that today at 10:30 we conduct an open meeting. So you can go to check our website and join us for the open meeting. It's happening later today, and we welcome there. You guys take care. See you soon. Bye-bye.